What's up guys, this is Danny from Rethink Peer-to-Peer Lending. Welcome back to yet another portfolio update on my channel. In today's video, we take a look at where I deployed 9,000 euro in March and what have been the most important updates in the industry. Before we begin, please make sure to follow my community channels on Telegram and WhatsApp if you want to stay up to date with daily developments in the peer-to-peer lending space. In March, I was able to earn 1,200 euro from my outstanding peer-to-peer portfolio, which marks the highest amount I have been able to achieve after 7.5 years of investing in peer-to-peer. This result was fueled by a number of new personal best income numbers last month, including Income Marketplace with 251 euro, Mintos with 240 euro, Debitum contributed with 105 euro, and Heavy Finance brought in 53 euro. The best overall performance in my peer-to-peer portfolio is coming from Mintos with 15.86%, followed by Debitum with 13.58% and Income Marketplace with 13.26%. In March, I had a total of 4 new transactions in my peer-to-peer portfolio. The biggest deposit happened with 6,000 euro on Mintos, where I found a new investment opportunity on the bond market. In particular, I chose a bond by the well-known Youth Group, which is promoting a return of 11% until October next year. After reviewing the numbers from the company's financial reports, there is very little to no reason for complaints. The group has been consistently profitable since 2011, generating steady double-digit profits over the past 3 years. The managed portfolio has been growing year by year. The balance sheet shows stable KPIs in terms of equity ratio, debt ratio, and intangible assets, and also the ratio of non-performing loans has been decreasing each year. Looking at the overall picture, I am quite surprised about how many youth bonds are being sold on the secondary market. If I missed out on any crucial information in this regard, kindly let me know in the comment section below. A nice side effect of my recent investment is the fact that I bought the bond below its face value, which allowed me to secure an immediate profit of 240 euro right from the start. Another 3,000 euro have been deployed on Nectaro last month, which is now my first new peer-to-peer platform after a 1-year pause. As you probably know, I had already visited Nectaro in Riga last summer. And since the platform has executed and implemented many of the discussed topics over the past few months, I am now confident that I have found a reliable and stable addition to my portfolio. Following my analysis of Nectaro 2 weeks ago, there were a number of questions from the investor community regarding the situation in Russia, the group guarantee, and the secondary market, which I would like to briefly address. As some of you correctly pointed out, the Russian loan originator Ecofinance, which is also a part of the Denino Fintech holding, has still an outstanding portfolio of 2.4 million euro on Mintos, with the marketplace expecting a recovery rate of between 50 and 75%. According to Nectaro CEO Segita, however, the loan originator is committed to fully meeting its obligations to investors. Obstacles in the process are the current regulatory restrictions as well as other challenges in processing payments from Russia. If the status remains unchanged, Nectaro estimates around 30 more months until full repayment on Mintos has been made. Another topic has been a missing group guarantee, which would offer investors broader protection against issues with loan originators. According to Segita, Nectaro is currently exploring the possibility of introducing such a guarantee. This one would initially apply to Moldova and later on to Romania as well. Further updates on this topic are expected in the coming weeks. The secondary market was another topic of concern for some investors, given the longer maturities on the platform. According to Segita, the secondary market is currently not on the roadmap for 2025. Instead, this year's focus will be on improving the product, increasing efficiency, and optimizing reporting standards. A secondary market would require both an adjustment to their licensing and extensive technical development, which they expect to tackle no earlier than 2026. Looking at the deposit side, I withdrew 3,000 euro from Esketit last month, mainly due to persistent and ongoing cash drag. Even though the managed portfolio grew by nearly 3 million in March, it hasn't made much of a noticeable difference in my own portfolio. The primary market is still as empty as ever, which means Esketit will likely need several more months, like in March, to reach a level that matches investor demand again. At the beginning of the month, I also withdrew another 500 euro from Crowdpear. The main reason has been the lower return expectation on the platform. Since there have been more opportunities above 10% lately, I am now fully invested again. Aside from interest rate fluctuations, the portfolio on Crowdpear has recently climbed back above 10 million euro after showing clear signs of stagnation in Q4. Some progress is also made on the recovery side, with 1 of 5 defaulted projects expected to be repaid by the end of April. Looking at the overall picture, the value of my outstanding peer-to-peer portfolio increased to 115,365 euro in March. Another record in terms of portfolio size was also reached on PeerBerry last month, hitting 117.45 million euro. This shows that even 3 months after the interest rate adjustments took place, the platform is still embracing a strong interest by investors. As a result, PeerBerry appears to be in a position to potentially tighten the interest rate screw even further if needed in the future. On Income Marketplace, assets under management remained unchanged last month. Considering a 2 million euro buyback, which was executed by Huvi last month, this can be considered as a somewhat notable achievement. This development was offset in part by the new loan originator Virtus Lending, which managed to finance 500,000 via income in its first month. A promising start for the new lender, which apparently is meeting the strong investor demand for higher liquidity. Income itself is currently focused entirely on the upcoming funding round. As a result, the bridge payments for the outstanding ClickCash portfolio have been suspended until further notice.